to join us and make us learn more perspectives about how to analyze key allocations to markets like India. Along with him, we have former chairperson of IVCA and founder and managing director and CEO of Multiples Private Equity, Renuka Ramnath, join us. And we have Manish Kejriwal, managing partner and founder of Kedaara Capital. I would like to call upon the three individuals on stage now. OTPP has invested $240 billion across fund cycles and strategies. We have multiple, so Renuka, their fund has invested about $2 billion across strategies and fund cycles and are a very active player in the Indian market. We have Kedaara as well. They're actually the largest fund out of the GIFT IFSC as well, and they've invested about $3.6 billion in India across strategies. So with that, I would like to call upon you folks at the stage, and we can start off with the session. Renuka ma'am, Manish, and Deepak for you. Thank you so much.
Well, I didn't know this is the way we were going to start, but welcome everyone. Great being here after I don't know how many years. Did we have one last year, Renuka? This thing? No, no. So it's the first time after COVID.
Yeah, it's the third year.
And I can't think of a better way to start off than Renu and I go back a long way. I've always seen Renu as a very senior member of the industry. In fact, she may not remember when I was at McKinsey, we did a lot of work together, helping her out at ICICI Ventures, and actually from there learning a lot. And maybe that was the inspiration of getting into private equity. So thank you for that, Renu. But with Deepak today, who we have, who was introduced, I think if I can just take 2 seconds and give a bit on the background on the firm. It's truly a unique organization. Which is the Ontario's Teachers OTPP pension plan. They have, at least at a personal level, been our earliest supporters when they didn't actually have any exposure in India. And I would be, in all humility, I don't think we as Kedaara would be here today without their initial support, because they supported us as truly the first large institutional investor. And it's so amazing to see what they've become in India and in Asia since those early days. But I think the way we're going to do this, and Rajat, keep us true on time. I don't know what time we're supposed to end, but we'll keep the first 5 or 7 minutes just talking about a bit of the contextual history on OTPP and given how special the source of money is, and also what I call the Canadian model. And then Renuka will take us through some questions with Deepak on what they plan to do in India. So Deepak, on that note, if I can start off and ask you to quickly describe the unique source of capital, both in terms of how many clients do you have on the source of capital, and give a context given the Indian context and compare it to that. That would be great. And I have one more question for you after that.
For sure. I mean, first of all, Manish, thanks for the kind words, right? So I think if we take a step back, and I mean, the hint is in the name, right? So it's for the teachers of Ontario. We have about 330,000 teachers that we serve, and we make sure to establish retirement security for them, right? So that's the fundamental goal. That's what we are trying to do. It's a mature pension plan with aging populations, defined benefits. So the return objectives keeps going higher. So it's $240 billion, which basically we are 107% funded, which I'm proud to say, for a defined benefit pension plan, you've seen the ones in the US as well, is a hard job to do. The other thing I think which you alluded to is the Canadian model, right? And I had nothing to do with it, but Ontario Teachers is the one which established and defined the Canadian model, which was LPs acting like GPs, right? Doing direct investments. And we started off with private equity, then we did infrastructure, we did it even before KKR, right? And then we got into commodities back in 2000. So we have gone back and created depth. we invest across all of the asset classes. We've created depth in each of those areas, and within each of those asset classes, we have sector depth globally, right? And we invest into 50 countries right now. But for us, there are 9 strategic countries, of which 3 are in Asia, and India is one of those, right? And that's what drove us opening an office last year, and me moving my family here. So I mean, looking forward to this panel, looking forward to getting to get introduced with a lot of individuals who are here at the panel today.
So I just want to underline, Deepak said it so quickly, it took me a while to understand it when I first met them. Please understand the source of capital and the beneficiaries of OTPP are only 300,000 teachers in one province of Canada. And this is a $240 billion pot. So what we tell our friends who are teachers in Toronto, because I went to high school there, and when I go back for my reunions, I have to wear jeans and a bandana, not in a suit, is that even if you're not paid well right now, Deepak and the team are taking very good care of the pension, and when you retire, you'll have more money than you know what to do with. So I think it's critical, and I think the learnings for us and what it could imply for our own pension industry, Renuka, we've been seeing, you know, in India as a source of capital, we've been looking at insurance companies, pension plans, but the returns that alternatives can generate, and that should be a component of any pension plan. I think we have a lot to learn from Canada and its pension plans. Deepak, I'm going to talk to you. I talk a bit more on the Canadian model because what I want to emphasize there is typically anyone in the room would say, okay, Deepak, OTPP, source of money, give us money, we will deploy. The Canadian model, which originated, you know, at least 20 odd years ago, was essentially framed by OTPP. Many of the OTPP members, a guy like called Mark Wiseman, who headed CBPIB, Sui, who was supposed to be on this panel, all the original lives started OTPP. Many of the guys who now run PSP, BCIMC, the origins were all from OTPP. And the fact is, while some people, at least in North America, look at OTPP as a competitor, and why do they see them as a competitor? Because they invest directly, and as Deepak was saying, even I don't know how many asset classes, but the Canadian model is very different from the American model. The level of professionals, who they can attract, what they pay from a compensation perspective is completely different. So they actually would be going both collaborating and competing with the largest global asset manager, whether it's Blackstone, whether it's Clayton Dubilier, yada, 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 at least in North America. But how they do that compared to, and that's a model actually, I'll be frank enough to say, even the other sovereigns globally, whether it's a Temasek or an Adia, they've all started this direct investing model. The seeds of that are truly from Deepak. So Deepak, if you want to give us a bit more context on how that started and how do you all organize yourself to take care of the opportunities across asset classes and countries?
Look, the magic happens at the asset allocation, right? So you start off with how do we create an all-weather portfolio, right? From there, you start saying, do I really want to pay 2 and 20? Sorry, guys, right? So across all the investments that we have, given the pool of capital we have, and then can we attract the same level of people? You start off with clear partnerships. So you allocate some of your capital to GPs, back to the asset allocation. Over time, you start doing co-invest. And as the maturity of the team keeps rising, you have directly focused teams, right? So last year, we did our first controlled investment in India, right? So that's sort of coming of age story, which has happened across.
You want to describe that?
So we've invested in Sahyadri Hospital. So we took a 90% stake in Sahyadri Hospital last year. And for us, it was really interesting because we are a long-dated fund. We don't have timeline of 5 years, 7 years, 10 years. We looked at it really as a platform. Right now, it's really not even a regional change. It started off in one state, closely concentrated in Pune, and our goal is to make it a national chain, right? And that's what we would spend time on, doing M&As first on the smaller scale, then increasing it over time and going after. So we're not, the example just underscores the fact that we're not scared to roll up our sleeves and do the work, right? And we have done that with you guys on Sampandana as well, which was an interesting investment, right? And a proper welcome to India for us.
In many ways, the one he's referring to is an investment we made about 6 years ago in a microfinance company called Spandana. We were truly co-investors. We evaluated the deal together. We co-invested. I think the OTPP team was as integrated into the Kedaara team as we were looking at the investment. And even after we made the investment, despite them being 200 times larger than we are, they also kept a board position alongside us. So we had one board position, they had one board position, and I know that their board member, Amit, has been in every meeting that they have. And it's no secret, we had a bit of a challenge in that company, but it's all behind us handled. It's at least a 4x or more right now. We're still invested, jointly invested, and they've been terrific partners. But I think the thing that he mentioned, which I think we should highlight, both Renu and I are limited, unfortunately, by samay, but they're by time. And we do have, unfortunately, an exit window we have to be disciplined about getting out to. The beauty about the Canadian model and the Canadian source of capital, and again, I don't want to speak on behalf of Deepak, is their holding period is relatively infinite, and if there is a good return coming, I'm assuming you'll want to stay invested rather than have a reinvestment risk.
I mean, the reality is, like, for example, infrastructure. We invest in those assets for 20 years, right? Private equity, we have typically exited 5 to 7 years, but we don't have to, right? And that's the model that we have to build up. It requires you to be disciplined, have the operational capability, so on and so forth. But yes, I mean, we can be invested into a company which is doing well, right? And it works very well because we can also invest into something, a Series C, right? Do an M&A through one of our portfolio company, keep holding that asset over a long period of time. And we looked at some of the assets, right? The data center was one which our private equity team had done, and now our real estate team is looking at, right? So we can straddle across asset classes, we can straddle across the balance sheet and do the investment from that perspective. So if we like a company, we can figure out a trade, right? So the flexibility in the model allows us to do that, right? Because look, this is all to generate alpha. Beta, we can do one person in the room in Toronto, deploy capital, right? So it's all for alpha, and that's how we think about, taking a long-term view on, and we don't even have to deploy capital, right? Because the capital can always go back to the center if we don't see the opportunity which meets our risk-reward ratio.
So Deepak, that's terrific, very helpful, and I'm going to pass it on to Renu to go through the details on asset allocation in India. My only lead-in question to that is, historically, the OTPP, we knew the 10 years, was first investing out of Toronto. Then we saw Toronto and Hong Kong. Then we saw Toronto, Hong Kong, and Singapore. Mm-hmm. You're the first person who's actually moving here with Bistar Bori, house, everything, and settling down with the kids and going to school here. Is this because of China plus one? At a global level, why is India suddenly, I'm assuming it's attractive or it's very risky. I don't know, what are the two reasons is why you're here? So tell us what made you guys, how do you look at India versus the other markets? And what is the timing for you to move here?
Yeah, look, I mean, China plus one helps, but I don't think that's the trigger or driver, right? I go back to the story I was mentioning, which is like we got more mature in India, and Indian ecosystem also got more mature, and we see opportunities across asset class that exist here. That's number one. I think we got a little bit delayed due to COVID. We would have opened an office back in 2020, right? Got delayed. It worked out well for me, right? So it's almost like a homecoming for me coming back and looking through it. But generally, what drives the attractiveness of India is, all the things that everybody else would say, right? Key demographic. We like the overall India story over the long term. If I take a step back and think about, I mentioned like we have 50 countries that we have invested into, but we took a step back 2-3 years back and we said, where do we want to concentrate our effort, right? And it had come down to 9 countries. Of those 9 countries, there were 3 in Asia, being China, Australia, and India. As I think about Australian exposure, that is more developed market exposure. So it doesn't give you an emerging market exposure that you want from a growth perspective. Like really attractive opportunities there, but they look very similar to what you find in North America. China is becoming, like China is deeper, right? There's key differences between China and India. I mean, China, the market is much deeper. Similarities are there, but it's becoming increasingly harder for people like us who are aligned with US in their political aspiration to do more and more, or at least not have a proper inlay into something else which gives you an EM focus, right? And then if you look at India, like even China, like we were focused mostly on equities, right, across the teachers venture growth, which is Series C plus investment for us, and private equity. Those were mostly the areas we were looking at. We never looked at real estate. We never looked at infrastructure. India, what gives us excitement is its cross asset class. We see the opportunity across the board, whether it's credit, whether it's real estate, whether it's infrastructure, whether it's venture growth, whether it's private equity. So across the board, we see a lot of opportunity for us to deploy capital. I would never put a number from a capital deployment perspective because it has to meet our risk return spectrum. But generally, like very bullish on India. And that's why like we have done $3.5 billion of investment across asset classes. By the way, like $2 billion of which came in the last 18 months, right? And this was done without having anybody on the ground. And now we have a 8-member team on the ground in Mumbai, and then 11-member team between Mumbai and Singapore, which is focused 100% on India. So we plan to do more.
Over to you, Renu.
Thank you, Manish. First, I want to extend a very warm welcome to you, Mr. Panda. It's a real privilege to have you here. And of course, there is a strong expectation in the industry that now you have come and later the money will come to the industry. So thank you. And Manish, thank you for including me here to bring diversity, gender diversity to our industry. Whichever way, I'm happy.
It's the good looks, Renuka, not the diversity.
Because I don't know why I'm here when Manish is here, but anyway, thank you very, very much. So after the launch of ChatGPT, it has become almost a crime to think first. So I just went to ChatGPT and I said, I'm going to be in this August panel. I have the privilege of asking Mr. Dara some questions. What should I ask? So I'm just going to ask those questions to you. And if you don't like them, then I can ask other questions. So the first question is, how much you plan to invest in Multiples Fund 4? And the second question is, how much money are you going to invest behind VCP, real estate, infrastructure in India in the next 3 years? And which are the funds? And how much you plan to allocate to them? Yeah. And the third question is, what would your advice to Indian funds be so that they become attractive for OTPP to invest? But if you don't like these questions, I can ask more interesting ones.
I can take a stab, probably not in that order, right? So at the end of the day, I think for us, and taking the last question first, partnership is extremely important, right? That's something that we've had with Kedaara. We've had this relationship for, over a decade now. And we want to work with teams which get us involved early on. We don't do syndication, right? We do co-invest, which is proper co-invest. We would co-underwrite with you. We would do co-due diligence with you, right? So understanding that model and understanding how we come in is extremely important. And this varies across different strategies, as you might imagine, right? In private equity, the co-invest model exists, right? Co-invest model, we have done that with you guys. We're trying to do that with Chris Capital, which are two funds that we have invested into, and scaling that over time. But more so now, the investments in India within private equity for us would be more direct, right? We might partner up with one more fund, but like it would primarily be more direct investment strategy. And within directs, within private equity, the focus areas for us are IT services, healthcare services, financial services, those three areas. And they make sense because of our check size, right? If we do a control transaction, minimum check size for us is $300 million. And if we do co-control, minimum, nothing under 150 million US. That's how we think about private equity. Infrastructure, we have always been direct, except when we are entering new markets, right? So there we have two platforms on road, one with NHIT, one with KKR Road, and one on the renewable side where we are working with the Mahindra family and working through with them. So strategy there would continue to be 100% direct, right? Probably would not have any investments into GPs, infrastructure GPs. On the teachers venture growth, which is early for us. I think what makes the most sense is to look at GPs who are earlier stage, because it builds up a pipeline for us, right?
Right.
So Series A, B investors is where we would look at, because they are the ones who are actually cultivating, working with the entrepreneurs, who have the right sense of the entrepreneurs, have helped the businesses grow well, and have the deep history on the ethos of the organization, which helps us when we come at Series C or D plus to invest, to think about, to get all those learnings, right? Standing on the shoulders of the giants, right? Is how I would call it. That's what it helps. So that's where we would look at some GP commitments, also to create a pipeline for our direct investments. But like the allocation between GP and direct would be more direct, less GP from that perspective there. Real estate, early days. Cadillac Fairview is our fully owned subsidiary. They have an independent IC, but we work with them like we work with any of our asset classes. So early days, they would probably look at performing office, logistics, those sort of businesses. That's where we are focused, and data centers. We qualify data centers now in real estate. So those three areas are of focus. Probably look more at platforms. So hopefully it answers your question from the relationship. I don't know if I know which funds, how much.
That's okay.
This point in time.
Yeah. No, I definitely like to say on behalf of everyone here and all the members of our fraternity that it is a great privilege to have an institution like OTPP make such a strong commitment to India. The fact, as Manish said, the fact that you have moved here is also a very big statement, and it kind of gives us as an industry a very, very strong hope. The fact that you are a direct investor, you said you roll up your sleeves, and we have seen that from your investments, is also very helpful for the industry, because you would be operating with the same level of understanding that we do, and the disconnect that happens between an LP and a GP because someone is not close to the reality of investing in India is unlikely to happen with your institution. So I definitely want to thank your institution and thank you, Deepak, for coming here. I read that your institution has a stated objective of putting about 50% of your total corpus outside of North America by 2030. And what would be, how significant would India be in that journey? And whether you have any guidance for all of us to kind of help OTPP in that objective. And would you look at India as a separate economy, as an economy which is an emerging superpower? It's going to hit a $10 trillion, GDP. Yeah. If not in the next 10 years, maybe 12 years, maybe 15 years. Whatever period you choose, it's a very significant economy. And how does OTPP see India, and how do we work together to also make that vision for India, the possibility for India into a reality?
Definitely. I think before I go there, I would be remiss not to mention that the fact that I moved on from Toronto, the rest of my whole team is actually in India, has been investing in India for the last like 15 to 20 years, right? So we've hired local teams. Rahul Mukim comes from Carlyle, Darius comes from Goldman, Dave comes from Macquarie, Advait has been doing hedge fund and public investing for the last 2 decades. So everyone we have has known this market, because we know it's extremely important to wrap ourselves around people who know the market directly, as well as our partners who help us, right? Because we've seen many of our colleagues have had false starts, right? And there are things that happen. There are nuances you don't pick up in the market unless you actually have seen cycles in the market. So that's extremely important. In terms of I don't know if I can put an allocation target. We don't do, because diversification, not diversity. Diversity also very important. Diversification we can get through beta. We don't need to invest in alpha for diversification. So the only reason why we would invest in India if we like the opportunity set in India, which we do. So I think from my perspective, I think I'll just use a number that Joe had given out, and I'll go really long range, like 15 to 20 years out. We see India as 5 to 10% of our allocation, right? So we are a $240 billion fund. Going to be a $300 billion fund by 2030. So that gives you some sense of the scale that we have. But that doesn't mean that we would invest the same amount of capital, would try to deploy it the same amount every year. If we see the opportunity in the marketplace, no reason why 20%, 30% of our overall investments can't come from India one day in that specific year, and there would be years where we would not write a single check, right? And that's okay. Easier said than done, but that's the discipline we want to drive in our teams.
Deepak, you mentioned that your firm has about $30 billion or so in green economy assets. Do you want to talk about that, and what are the lessons for India and Indian managers from there?
Yeah, and so it's in green and transition assets. We have roughly $30 billion. We did roughly $5 billion last year. So we are scaling our commitment, right? Because the energy transition is real. It needs to happen. It needs to happen at different scale across the different regions. So I think we have sort of understood how to make that happen in North America. In emerging markets, it starts to become hard because at the same time, like allocators like ours, are putting net zero targets, right? So I'll give you an example, right? Going from coal to natural gas is not a driver of energy transition in North America, but it is in India. So we have to figure out ways and lever through which we can facilitate that. So what we have done ourselves is we have taken out a sleeve of $5 billion, which is high carbon transition assets, where if we can take a coal-fired plant, transition it to renewable energy over the next 10, 15 years, we can take it out of our sleeve and do the investments there. But that's not the only thing that we would look at. We are very excited about EV battery transition and what role India plays. So that's something that we would do a deeper dive on. Going forward, we are very interested in renewable assets. We made the investment. We have the commitment with the Mahindra family where we are going. It's mostly solar right now. Can expand into other areas. Very excited about hydrogen, right? As one of the areas where India could take a leadership position. So we'll watch that and see if there is an opportunity for us to play a role. So multiple threads across the board that we are looking at. But for us, climate is impact, right? I think there was an impact forum which was happening earlier. And the reality is for most of the investors like us, within social, to be able to get the same level of returns is very, very hard. But climate has come of age where you can actually invest capital and drive. And I don't want to only look at like a reduction in climate. We want to look at emission reduction delta, which is like if we put our capital, can we stop some of these businesses from emitting going forward? Is there a way for us to stop emissions coming out? And then we would also look at, taking the emissions, storage, things like that across the board. I think our time's
Do
up.
you see
I'm just being
opportunity
mindful
for,
of time.
just one last question, and I know. So do you see opportunities in India to launch pure green economy funds, or just the ESG consciousness is a sufficient good step at this point of time? What's your assessment?
I would say, and some people would disagree with me, but at the end of the day, I think that having an ESG sleeve would have to go away at some point in time because all investments should be ESG investment, right? You should have proper governance in each investment. If you combine environment and social, like impact would be growth at some point in time. I think that's my philosophy. I think the whole piece around separating it out, carving out separate sleeve is nice. It gives some acceleration to the ecosystem, but it hasn't become mainstream until you keep seeing some of that, right? Back to your consideration around diversity, until we keep talking about diversity, we haven't reached there, right? If we can stop talking about it, is what tells you that where we've gone.
So looking from far away from Canada at India in the last 10 years and our industry, alternative asset industry, just one last question. It's important to get his views on.
It's you versus Shweta, so you guys decide.
No, I'm done. This is the last question. What's your assessment of how India has progressed in this industry, and what would be your messages to the regulators, to the tax authorities, to the industry participants to make that $10 trillion economy a reality where we will have a very significant role to play?
Look, India has progressed tremendously. This government has done a great job at actually providing policy stability, which is extremely important to long-term investors like ours, right? And they are respectful of foreign capital. They invite and create platform for us to come in. So over the last decade, and I would say more so over the last 4 years, there has been an acceleration in terms of from a regulatory ecosystem as well as markets growing themselves and markets catching up to what entrepreneurs here are capable of, right? The second thing that has happened, which has happened over the last 4 years, I don't have to tell you, is the tech ecosystem, how the whole tech stack has expanded and come through. And you see that in every, and I was joking with Manish the other day. I said I have gaps because I used to come every year and then every 2 years. Last I came was in 2018. When I came back in 2022, the world fundamentally changed, right? That's my own personal experience, where you go and you see by how much it has accelerated. I mean, the way we do our payments, it doesn't happen in US right now, it doesn't happen in New York, it doesn't happen in Canada. Like everything that you start touching, like KYC.
Yes.
It doesn't happen anywhere else in the world, right? Things like that, that gives a lot of hope for us to move forward. So as long as we can maintain regulatory stability, so easing of regulations and political stability, I think everything else is just, I shouldn't say this, but easier here than in other markets.
Thank you.
Listen, Deepak, really want to thank you. This is, and just wish you the very, very best in your new role. Sorry we didn't have time for questions, but Shweta's looking at me like we're going to explode out here. Sorry, and Mr. Panda can't keep waiting. But finally, a big, big thanks to Renu. The questioning makes me sense. We're going to have another wonderful lady join the finance ministry in Delhi. But thank you, Renu. Thank you, Deepak, and thank all of you for being with us.
Thank you.
Thank you so much. Thanks,
Thank you,
everyone.
everyone.
Thank you, Manish, Renuka, Deepak. If you can just stay back for a pic. And meanwhile, I'd request Shweta Rajpal Kohli from Sequoia, who's graciously accepted to welcome Sri Panda. So to